All right, good morning and welcome to the stock market update. Wow, there's a lot to talk about. It's Thursday, June 16th, and here's what's happening. So yesterday we had a rebound for the S&P 500 and the Nasdaq finished 2.5% higher. This was despite the Fed raising interest rates by 0.75%. And they also lowered the economic outlook. So we take a look at this statement, what it means and why the markets rallied yesterday. Also, crude oil keeps falling and Tesla drops after announcing another price increase. Plus, we'll show you how we traded Fed Day. But before we dive in and show you what is moving the markets, if this is your first time here, hi, I'm Markus Heitkoetter, and that is my head coach, Mark Hodge. And together we have more than 47 years of trading experience. And every morning we sift through a mountain of news websites, newsletters, and reports. And then we take the most important news and go live right here to share with you what you need to know as you head into your trading day. Now, if this is your first time here, I know it can be overwhelming, but don't worry. We have a special video just for you that I will link to in the description, and that's a great place to get started. Okay, Mark, before we take a look at the markets, totally yesterday morning, my AC went out, came back from Europe, and then it was running for a few days. It went out. So I think there's a conspiracy theory going on. Because here's what's happening. I want to hear this. So I have a home warranty, right? So I called yesterday, the home warranty, and said, oh yeah, no problem. We send somebody out. And really, within a few minutes, I really received a text message from somebody saying, hey, I'm a signed contractor. However, this is the other lady then. We are around 40 miles away and you're outside of our service area. I thought, oh, okay. So I go back to the homeowner's warranty and they say, oh yeah, no problem. We assigned somebody else. Did not happen. So I called them back a few hours later and say, it's getting really warm here in Texas. I mean, we have triple digits right now. And so they said, all right, we assign you right away. They assigned me to the same company and the same company texts me back and say, you're outside of the service area. So we have been playing this game pretty much all day yesterday. And let's see what happens today. But yeah, it's warm.
Hey, in Sacramento in the summer, I can absolutely relate, and the AC is definitely one of those things you need.
I do need that. Anyhow, okay, let's take a look at the market. So the S&P yesterday up 1.4%, the Nasdaq yesterday up 2.5%. And now let's take a look at the 5-minute chart, because this is where we see super quiet going into the FOMC announcement, and then a seismograph going off like an earthquake. But I mean, at the end of the day, we pretty much closed slightly higher of where we were before the Fed statement.
Yeah, there was definitely a negative reaction to the statement itself. And you see there was some volatility, and then we were trading at lows of the day, but then things came back, and it looks like your traders really liked the press conference and what Powell had to say, finishing near the morning high. So I think it was a decent response and a positive move higher. A lot to be said, a lot going on.
Yeah, let's talk about the statement first, because that was the one that was shaking up the markets here. Because, I mean, yeah, the Fed hiked the benchmark interest rate here by 0.75 percentage points. That's the biggest since 1994. That's what, 28 years?
28.
And here's the deal. Then they also talked about the economic outlook. And that's what we have here. And they basically just said, well, we have to revise it a little bit. For example, the PCE inflation, they said, well, it will probably be 5.2% instead of 4.3%. So that's significant. The GDP, the gross domestic product, originally 2.8%, but then they revised it downwards to 1.7%. What else did you see?
Unemployment rate to 3.7 from 3.5. And then there was also the median estimate for the Fed funds rate to 3.4% from 1.9%. So that's a pretty big jump.
And that's the big one. So let's take a look here at the CME Group Fed Watch tool. This is where we see that right now market participants are thinking that we will have another 75 basis point rate hike coming up here in July. then half a percentage point. But you see that this year has really, really shifted. And this is exactly what you said, that now it's a 3.4% where the interest rates will be by the end of the year instead of 1.9 that they originally thought.
Yeah, that's huge. That's definitely a big change from a trading perspective. Probably a little more in line with what traders have expected. But for the Fed to come out and say that, make that revision, that was a surprise.
All right. So let's talk about the press conference. The press conference 30 minutes later, and at first traders were very excited about what Powell had to say.
Yeah, and there was this, debate over whether or not Powell would go with a half point or 3/4 point rate hike, and the probabilities, the number of traders believed it was going to be 3/4. Marcus, I'm not trying to point out that you were wrong, but I do wish I would have made a bet with you and bet some fillets, but that was not the case. I did not put my money where my mouth was, or my mouth where my money. Anyway, um, he raised it 3/4 of a point, but he also said that he does not expect this to become common, and an allowance like the July meeting is likely to feature either a 50 basis point hike or a 75 basis point rate hike. And he also responded to the CPI data that came out, which was also kind of a shift. A lot of times the Fed is a little more, they're looking more big picture, but it
Right.
sounds like this was also a reaction to exactly what we had Friday.
Yeah. So, I mean, right now, market participants think that, okay, when he says that 50 to 75 basis points in the next meeting, they say it's probably 75 basis points. And this is why, I mean, the markets at first react positively because it shows that the Fed is ready to
Yeah.
take action. And that was the message yesterday that market participants liked, that they say, okay, the Fed is no longer underestimating inflation, because as we know, until November, it was all transitory. Then we
Yeah.
retired this. Then Powell said, yeah, we keep an eye on inflation. And now they say it's concerning. And now even this is what we see here, that they say, okay, we got to tackle it. They
Yep.
also, in their statement, removed some of the languaging. Did you see that?
I missed that part.
Yeah, you see, they used a phrase, let me just look it up, indicating that the FOMC expect inflation to return to its 2% objective. 2% objective. So this was in there for the longest time. They took this out and replaced it with a statement that they are strongly committed to returning inflation to its 2% objective. So this means they're no longer sure, but they will do everything they can to get it back under control. And I mean, we said it. They expect unemployment to rise a little bit from 3.5 to 3.7. I honestly think that we'll probably get closer to 4%. I think that
Sure.
they're underestimating a little bit, because we hear from more and more companies that they are having a hiring freeze or even laying off their workforce.
Yeah, and honestly, I think the Fed should have really come out and said that they skirted around the issue. In a sense, they're saying, okay, inflation is our priority. We know the Fed has a dual mandate: it's price stability and maximum employment, right? But at this point in time, they want this soft landing, which means that they can put pressure on rising prices and use some of their tools to reduce inflation, but here they do have to sacrifice jobs. And I think it would have been better for them to say, we are committed to doing this, and it could be that jobs are the byproduct of this, but this is the most important thing for us to do for the economy at this point in time. They kind of skirted around the issue a little bit there,
Yeah.
but the commitment and is what traders liked.
Yeah. However, this morning it looks a completely different picture. Looking at the 5-minute chart of the Nasdaq right now, pointing to a 2.4% lower opening, and there was a lot going on overnight because the Fed is not the only central bank that was hiking interest rates. There were a couple of more.
Yeah, there was a ripple effect around the world. Uh, the BOE delivered a fifth rate hike in a row, raising by 25 basis points to 1.25%, and saying that hinting that there could be bigger moves ahead. So in Europe, or Bank of England, that was going on. Even the Swiss central bank, which is not known for raising rates, they raised rates for the first time since 2007 in 15 years, jumping on the global effort to raise rates because of inflation, and they raised 50 basis points.
Yeah. So that's also quite a lot. And I mean, if you just look at what else happens, right? I mean, we have crude oil still moving lower here. So that's kind of good. That's what we want to see.
Yeah.
But at elevated levels, we're still at 114. But we know that crude oil energy prices are a big deal when it comes to inflation. Looking here also at the 10-year yield this morning, on the move again. So
Yeah.
higher here now at 3.387. So this morning already up 3% in overnight trading.
Yeah, nice reversal yesterday, but I think this snap right back is what's leading to the dip in futures.
Right. So, and then we also had some more economic reports coming out this morning. So let's just jump over to Powerex Optimizer and the economic calendar. So we did have this morning two reports. Actually, we had the housing starts that came in worse than expected. No surprise, right? I mean, we talked about it yesterday. I mean, mortgage rates have jumped dramatically and will probably continue to rise higher here as interest rates are rising. So that is not surprising. Building permits also down. But let's talk about unemployment claim and the Philly Fed Manufacturing Index.
Sure. So we have unemployment claims creeping higher. So Americans filing for first time unemployment, moving up to 229,000 last week versus the 215 that was expected. It was below the 232 that we had the prior week. But the Philly Fed Manufacturing Index, this really dropping at minus 3.3 versus the 5.1 expectation. This measures, well, it's a survey of manufacturers in Philadelphia. And when we get readings below zero, it's showing worsening conditions. And that's what we had.
Yeah. However, the reaction of the markets was rather muted to this because it's an orange
Sure.
flag report. That is not the big one, right? I mean, that's not indicating that our economy is weakening here. And this is what everybody wants to see. Okay, what is it with the recession? What is it with the soft landing? Will they be able to pull it off or not? And if you take a look at the 5-minute chart of the Nasdaq, we see that actually it went higher on the report initially. Now pulling back a little bit, but off the overnight lows, but still pointing to a much lower opening. I mean, pretty much giving back all the gains that were made yesterday as we head into the open here.
And the open will be interesting.
Yeah. So the question is of how do we trade this? What we did yesterday. I mean, we didn't enter any new trades because we're both pretty full in terms of our portfolio. We like to have 5 open positions. So I was actually looking to taking some profits here on Budweiser because Budweiser had a good day yesterday. So I wanted to see if I can sell some calls, not taking profits, but sell some calls here. I think I was a little bit too aggressive because I thought, oh my gosh, we're rallying into the close here. So we'll see this morning, a little bit of pullback. But yesterday was pretty much sitting on our hands, right?
Yeah, I had some positions I felt comfortable holding into the Fed statement, some wheel trades, but there was nothing to do with my open positions as well. So for me, nothing yesterday.
Yeah. So the big day is Friday. This is when our options expire, and we will see if they expire in the money and we get assigned, or if they expire out of the money. Either way, we can keep the option premium, but then it depends based on this what we'll do on Tuesday, because we got to talk about it. Why Tuesday? Monday is a holiday in the market. So Monday markets are closed.
And no stock market update.
And no stock market update. But tomorrow we'll have a stock market update. However, tomorrow it will be you because I'm traveling with my daughter to a sailing regatta in Dallas. So it is a qualifying regatta. So really important regatta. Anyhow, so if you would like to know how we trade these crazy markets, take a look at these videos that I'm posting here. And then I will see you next week. And we will see you, Mark. You will see them tomorrow morning.
Tomorrow. with a
bright and
good
early.
working mic.
Okay. Have a great rest of your day.
Happy trading, everybody.